Investors and traders, welcome to the channel Market Chart Pattern. In this video segment, we will take a look at the key US banking stocks and also the key banking ETFs that we have been following for quite some time, ever since this whole situation with the Silicon Valley Bank has started. We have been actually following the ETF for the regional banks, which includes smaller banks. Also, this bank which went belly up today, bought by JP Morgan, which is the First Republic. And we also then take a look at the XLF, which includes major financials and also individual banking stocks of big banks like Goldman Sachs, JP Morgan, etc. This video is for educational purposes only and it is not a financial advice. So guys who have joined us as subscribers, welcome. Thank you for joining and becoming a subscriber. For those new subscribers and also those who like to join the channel but haven't subscribed yet and they watch our analysis, just to give a brief description what we do here. We take a look at the stock market. We also take a look at foreign currencies, commodities, precious metals mainly, and also we take a look at the bond markets. We take a look at these markets from a technical analysis perspective. So most of the time it's about chart patterns, pattern recognition, and using Fibonacci retracements, projections, and expansions. We actually work with what is known as the harmonics. So guys, this video is for educational purposes only and it's not a financial advice. And what we are looking at is the daily chart of the Spider S&P regional banking ETF. And today is the 1st of May. And what we are looking at is this price action in this ETF, which includes the regional banks. So these are smaller banks. They are not the bulge bracket banks like JP Morgan, etc. And here, the last video which we had done, we looked at the price action. The price action actually did not look that great, but it had been just consolidating, and it had just been consolidating between the 61.8% Fibonacci retracement and the 78.6% Fibonacci retracement of the lows of the March 2020, those are the COVID lows, to the highs reached here around $78.50. I believe those are the all-time highs. So guys, the index had been actually telling us a story. If you look at this, if you remember right here, this is the 3rd of February. If you look at this index and if you look at the broader stock market like the S&P 500, we can clearly see there was a different kind of story being told here. Regional banks were coming under stress because of interest rates increasing really quickly in the year 2022, and they continue to rise. We have the next decision coming in within this week. So this is where this whole news about the SVB, Silicon Valley Bank, began to come out, and this is what I've labeled as the SVB crash. And this is where the bank went belly up. So together, the Federal Reserve, and the Treasury Department, they got together. Federal Reserve actually created a program. It's got a special name. I'm forgetting the name of that. I think it's called BTF, something like that. And what it did is basically they came up with a fund of $300 billion, which were injected into the financial system. And some of the bigger banks were given some of those funds to put as help out the regional banks. So that kind of covered up the situation for a lot of these smaller banks for quite some time, and that's why we see this kind of price action, which is just going nowhere. it is going down, but it's not going massively up either, but it's just been consolidating around here, going sideways in a trading range. But looks like it's going to go and eventually hit that 78.6% Fibonacci retracement, coming at around $38.35, roughly speaking. So guys, what do we take out of that? Possibly there is perhaps more pain to come. There might be other banks which are not at the radar at the moment, but they might still be coming out in the near future. So we will be watching the price action. The price action will tell us a lot of things, which might not be in media as yet, but they might be coming out. But looks like the direction over here is perhaps to the downside, and also there is this bit of a wedge formation here. And if this lower end of the wedge, it goes around $40 per share level, it breaks to the downside, then we have this 38 35 dollars per share level. So let's now take a look at the XLF. So this is the daily chart of the Spider Select Sector Fund financials. So the important thing here is just to recap two major things here. One of the things is that there is this big ABCD formation, which is to the downside. However, there are key support levels, which is one of this, which we had pointed out actually uh, on the 24th of March, around $30 per share level. That needs to be broken to the downside. One of the more important things to note is this current rally, which has taken place ever since the Federal Reserve and Treasury began to came up with that program and Federal Reserve injected liquidity into the marketplace of $300 billion. In this potential CD leg to the downside, what we have noticed is that this was the rally, how much this rally had risen by, and if we project it by this much, it comes to this level of around $34 and roughly 30 cents, which is just above the 61.8% Fibonacci retracement. So one of the concepts that we like to take a look at is the symmetry in the market. So for this ETF or this sector to start to begin or perform better, this bearish symmetry must be broken. It must be broken to the upside. So we have a fair amount of resistance hanging over, and although this rally looked pretty good, it is just a bear market rally till this situation gets resolved, in our opinion. Okay, guys, so just looking at today's price action, what we can see is that the market actually tried to rally. It found resistance right, around this structural resistance area. It is a double top formation here. And we will have to watch what the price is likely to do the tomorrow, and if whether there is going to be a follow through or not. There is a possibility, it might actually go and try to tackle this 61.8% Fibonacci retracement level. However, moving below the $32 per share level means that actually we are moving lower. So guys, let's take a look at now some of the bigger stocks in the banking industry. So let's start with JP Morgan, because JP Morgan is the one which bought the FRC, which is the First Republic Bank. So guys, here we mentioned this in the last video which we had done on the banking stocks. The price action for JP Morgan has actually been in a trading range highlighted in this box, and that's the way it has been for quite some time, ever since this is where the SVB stuff was happening. We had drawn a 38.2% Fibonacci retracement. It found actually support between 32 and 50% retracement, and it is the bounce above from this level was pretty strong for JP Morgan. It is it's a big bulge bank with fairly strong balance sheet as it appears. However, from a pattern perspective, what we are really looking at is this key resistance coming from 61.8% Fibonacci retracement. So this is a pretty strong resistance hanging over, and the stock really needs to clear above this for us to be able to say that okay, maybe now the different kind of a pattern is in play, which could be something like this: A, B, C, D. This is one-to-one projection like this, which will actually take us right into this gap area here. But till this is not broken, we have to basically, look at the stock from a bearish side. In fact, so if this lows goes away and the trading range breakout is to the downside, then what we are looking at is a retest of these lows here of $100, and then possibly even the retest of the COVID lows, but going back to March of 2020. Let's take a look at Goldman Sachs. Here we go. So the Goldman Sachs, this one is pretty interesting. In our last video, we had mentioned about the bearish symmetry. So look, the bearish symmetry is about this much, and then we also have this general resistance here. So what this stock tried to do today was try to break out of it. However, the sellers came in and the stock was sold. And look at this candle. It is a pretty bearish looking candle. However, we need further confirmation, so we'll have to wait and watch tomorrow what the price action is likely going to be. Also note that 1st of May was a Labor Day bank holiday, so volumes around this time of holidays could be a little bit low, so we'll have to watch the next couple of trading days to really see how the price action is going to behave around this level. So again, look, it's moving in this channel, and if it begins to move lower, then longer term, this pattern in the shaded area, that could also be in play, which actually could see the stock trade down to around $242 per share level, roughly $243 per share level. And over there we have a pretty strong support. Okay guys, so let's take a look at Morgan Stanley. So the Morgan Stanley stock actually was one of the better stocks in terms of the banking stock universe that we are taking a look at. So look at this nice rising channel which provided support here, here, and here. And what we were looking at was, this was the 38.2% Fibonacci retracement of this entire swing from high to low. The stock had actually broken above it. And we had mentioned this 1.272 expansion coming in as a possible next level of resistance, and so far the stock hasn't been able to really clear that to the further resistance that we were looking at around this shaded region. So what it means is that if it begins to break this level right here, let me try to highlight it for you guys here. So on a closing daily basis, then the chances are that actually is going to go and retest these lows, the channel bottom around here. And if it breaks it to the downside, then the next level we are looking at will be the 78.6% Fibonacci retracement, which comes here, right here, to about $78.25 roughly speaking. And below this would probably mean that we might actually be have a kind of an ABCD pattern in play, which could actually see the stock go and test this gap area coming from 21st of December. That is where the one-to-one projection, the ABC pattern, will take us to. Of course, this structural support would need to be broken as well, and we'll have to watch the price action on a daily basis, and of course we'll inform you as we always do when we do this segment in our weekly catch-up. Okay guys, so let's take a look at the Citigroup. So Citigroup actually is one of these big bulge banking stocks that we have been looking at. However, it's a pretty weak one in terms of the price chart pattern, because a lot of these banks, such as JP Morgan, they were able to take the previous highs out after the COVID lows. This stock did not. So let's just quickly show you that. So there we go. This is 20 this is the 14th of Jan 2020. That's when the high was made. Look, this is the lows of the March 2020. This is the rally. It did not take these highs out, so we have to watch that and take into consideration. So what we were watching in this stock was this pattern formation highlighted in yellow, and it's so far provided pretty strong resistance. The stock had actually gone and was finding support around this region of $46 per share level. um, it was structural support, and also I believe I have to double check. It was 50% level as well in terms of the retracement. So the stock did find some sort of a shorter term bullish candle formation here today, just like the other banking stocks we are looking at. It tried to rally, sellers came in and sold the stock. We'll have to watch for a follow through uh, tomorrow in the next few trading days. But looks like if this 61.8% Fibonacci retracement and also this low is broken to the downside, then we are looking at further downside in the stock. Let's take a look at WFC, which is Wells Fargo. So guys, this Wells Fargo stock has actually been uh, has been selling off for quite a while. Look, let's go back to the beginning of 2022. So it's been over 1 year, and in fact, you can see this highlighted area, shaded area. That's when we were looking at the stock, and I'd done a video about it. You can find it in the archives. We were watching for a very specific pattern formation around here, around $57.50 area, as a major resistance, and the stock did sell off. Then there was another high made, which is another pattern formation. Eventually this resistance was taken out to the upside, the high taken out, but it did not last long, and we have been selling for over nearly 1.5 years now. So here again, look at these rallies. There is a very clear symmetry in the marketplace for the stock, and every time there has been a rally of this magnitude highlighted in these black lines, the market has actually sold off. And what is really important to know is that here the stock had actually found support from the 61.8% Fibonacci retracement right here, and it had tried to rally, but it's not even able to reach the 61.8% Fibonacci retracement. Plus we have a confluence coming from the bearish symmetry. So the stock is actually looking pretty weak. If it begins to close below this $39 per share level, most likely it's going to go and test the lows, and possibly even go lower and test to the $30 per share level, which is 78.6% Fibonacci retracement. And we are also watching this purple 101 ABCD formation here, which could actually take the stock lower to around $25 60 cents 70 cents area, roughly speaking. So guys, this is what we are looking at in terms of the banking stocks. Apologies, the video is a little bit longer, but we had to cover a lot given that the kind of news that is coming out of the financial sector recently. So guys, if you like our analysis, how we look at these markets using pattern recognition, Fibonacci retracements, projections, extensions and expansions, and work with harmonics, please do subscribe to the channel. And if you enjoyed the video and it provided educational value, then please do like the video, and good luck and good trading.